All right, today's date is June 27th, 2016. I am Calvin, and I'm going to go over a trade setup that I did on the New Zealand dollar on Friday. Hopefully, this will help somebody. If you're lacking a little understanding or need some help, trading, I'm going to just throw out this free video today. But before I get into it, let me make one thing very clear. I usually do not take trend trades like this. I usually go for a reversal trade because you can make a lot more money on them, generally speaking. And my success rate on reversal trades is usually around 80 to 90%, depending on the market conditions. So I try to stick to them. But every now and then I get a trade set up on something that is too good not to take. So we had that app of the New Zealand dollar on Friday. So that's why I'm going to go over it. Okay, first of all, this is actually what I had noticed about the New Zealand dollar before I took it. We were retesting the moving average for the first time after a breakdown. See, this is the high, major breakdown, retesting the moving average. More often than not, when you get a retest of the moving average after a breakdown, really about 80% of the time, you have a significant fall off of it. So this made me very, very interested in the trade. I could go through some other ones from Friday. Odd Frank, for example. Again, you had a big collapse through it, retested the moving average, and we fell, 72.90 all the way down to about 71.59, over 100 pips. Australian dollar, again, we hit this first touch of it after the breakdown, and again, we have another collapse here. We can go through the Euro franc. You can see major collapse. It bounced back up to the upper band, collapsed back down into it. The euro dollar, yeah, we came back into it after the collapse, and again, we came back down. Pound franc, I don't know if we have, nope, nothing there. Pound dollar, no, nothing there. New Zealand dollar, again, like I said, we had the first hit of that. You go to the dollar CAD. Again, you had a massive push through the moving averages. First hit, it came back down, and now it's bouncing again. Dollar franc, same story. Pushed above it. Came back to retest for the first time. Another big bounce. Dollar yen, we haven't got that yet. We're just kind of consolidating sideways here. But at any rate, Mexican peso, again, you had a big push through it. Pull back into it. Bounce level there. The ruble, that's not helping us out at all. But anyway, I think you get the point here. A lot of times when you get the first hit of the moving average after a major sell-off or a major rally, you're going to get a reaction off of that. And that's what I noticed here. So I went down to the lower time frame, and here's what I found. On the H1, you have the institutional moving average. This is the one the institutions use, above price. So I knew that this was probably going to restrict price. Then I went down to the 30-minute time frame. 30-minute time frame, we have a major divergence on the THV, which is the little indicator on the bottom. I'm not a big person on indicator. I like price way over indicators because indicators are a derivative of price, but sometimes you get things on the THV or other indicators you cannot ignore. You need to pay very close attention to them because it may be telling you something significant about what's going on in the market. In this case, you can see a big push up off the lows. THV reacting accordingly. It's green. Excuse me. And then you have a push down. THV turns red. And then you have one more push up before a big move down. And you can see the THV here is red, and it's dropping while price is going up. This is what I call divergence on the THV. You have a push up. The THV should have went green and pushed up, but it did not. There's something wrong. It should not have done that. So that's a pretty good indication that it's probably going to fail. So again, I had the H4, first hit of this band. H1, you had resistance because of the moving average. The 30-minute time frame, you had major THV divergence. Going to the 15-minute, this is something that really caught my attention. The biggest things for me was the 30-minute THV divergence, the H4, first touch of the band, and then the 15-minute. What you're seeing here is you had a major collapse, and then you just had a grind higher and higher and higher and higher and higher. It kept going and going, 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 going. And then finally we got a pretty significant retracement towards the highs. It had gone forever, and this thing needed to pull back. So I saw a pretty good retracement back down, and then you had a slow push up. This is very key. I posted this on Facebook the other day on my business page because a lot of people don't realize this, but if you are trading a double top or double bottom, the retracement back into the level should be slow. If, for example, this went up, pulled back, and then you had a 2-bar move back into resistance, chances are you're going to get a breakout through the level. You should not be taking a double top if it's not taking price significant amount of time to come into that level. If I zoom in here, you're going to see 1, 2, 3, 4 bars push down. Now to retest this level, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars to get back up into that level. So really, you had a very slow push back into the level, which made me very, 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 very interested in the level. So I looked at the chart and I said, okay, we're overbought on the stochastic. It's due for a move down. We have divergence right here on THV. We have divergence right here on MACD. Slow push up to retest the level after a massive move, so I knew the run was getting exhausted. It was time to come down. 30-minute time frame, you have THV, major divergence on the THV. The H1 time frame, again, you had price being restricted by the moving average up here because, as you can see, price usually bounces off this moving average. H4 time frame, again, first hit of the band after a major crash through it. That is why I took the trade. I got in at 71.50 and then I closed at the gap because I assumed that the gap would probably fill, and who knows what would happen after that. But again, you can see we moved back up to the moving average, failed, moved back up in the moving average again, failed again off of it, and here we are down at the bottom. So we may see a little bit of support. It's probably going to bounce a little bit here or just consolidate before a crash. So I'll be watching it to see how it reacts down here at the bottom. But at any rate, again, that's why I took the New Zealand dollar. Again, you just kind of pulling it all together. And if I look at the daily time frame, you're going to notice there was a major level on the daily. I actually had this marked off before Brexit, but I didn't take it because of the volatility that was due to happen because of Brexit. I had this trend line right here, and I was expecting a sell-off up here. That is another reason why I took a retracement, because I assumed that there was more downside to come, because that's a very significant level up here. And one more thing, it was also a breakdown level in the market. You can see you have a double bottom here, a breakdown below it, consolidation, a push back up, ultimate failure. So I knew that when we came back up to this, because it is a major, major pivot in the market, it's probably going to fail off of this. It would not shock me if we came down much lower off of this level. I will be watching in the days and the weeks to come here. So, but that's really the trade that I took. Again, the biggest factors for me on this was exhaustion move and a slow retest of the top. The time and day was very important too. This time and day was, we were looking at 21:45. It was the middle of the afternoon on Friday, so I was not expecting any kind of breakout, so I was more than willing to take a trade, a reversal trade off of this. And again, like I said, the other thing was the H4. You had a retest after the massive breakdown, so I assumed that we were going to probably come back down, at least test the lows. But again, I took about 75 pips off of that. Very good trade. So if you have any questions at all, be sure to leave a comment below, and I'll try to get back at you. All right, guys, have a good day. Bye-bye.